Thanks for the warm welcome, everyone, and fantastic to be with you on this beautiful Friday afternoon. Life's pretty good at the moment, isn't it? Seeing some of these innovative companies coming through, but also, on the back of the Eagles winning the grand final over the weekend. I've got my baby boy's first birthday tomorrow, so that'll be 1 year I've made it as a parent. I think that gives me a tick of success. And then tonight I've got my NBA fantasy basketball draft, which I'm extremely excited about, as well as talking about tokenised assets and the new world that's bringing. So in terms of tokenising assets, we're talking about particularly gold here today, but really you can tokenise anything of value using blockchain technology, and I think that's going to be pretty exciting. Potentially even you could look at tokenising my entry into that NBA fantasy draft and having a shot at the winnings that I may get at the end of the year. Based on my track record over the last 10 years, I won't do that to you. That's a terrible investment. Let me have a look at the clicker. There we go. So a few things I want to talk to you today about. The resources industry and how blockchain technology can be applied. A bit about the company DigitalX, which, as you mentioned, was the first company to list. It was based on blockchain technology. A bit about my team, why crypto and blockchain is valuable, some of the benefits of tokenisation, and also some of the risks that you need to be aware of. So, a lot of people hear from the resources industry today and saying, and hearing a lot about blockchain technology. Is it too early for us to get involved? Well, if you have a look at, one of the most risk-averse industries worldwide, that's banking. The banks are already heavily experimenting, testing and implementing blockchain technology right now for their businesses. So I think, for a business that's, without the same sort of regulations and clearly can see some of the major benefits coming, it's definitely worthwhile having a look at. And in terms of the resource industry in general, well, there's actually a lot of track record to say that you guys are very quick in adopting new technology, using that, whether that's, across robotics, IoT, anything to do with new hardware. So I don't think blockchain technology should be anything different. When there's an opportunity to improve your business, reduce costs and, see new business opportunities, absolutely you should be looking at it right now. And then in terms of your competitors out there, well, a lot of those are already using it. So, now's the opportunity to get involved or, see your competitors essentially taking the lead. Blockchain technology is one type of tech, but it's quite interesting in that it really benefits from using some of the other emerging technologies out there, like, Internet of Things. So you can actually have full transparency across your supply chain. You can use digital smart contracts so that you can actually execute payments automatically. And then, with any disputes that may come through, well, those are far easier to resolve. Arbitration's far easier as well. So it's very exciting technology. A bit about the company background. Been around since 2013. Originally, DigitalX was actually a major Bitcoin miner. Not mining in traditional sense, but mining using a server farm out of Iceland. We actually built a cryptocurrency exchange to supply the early crypto exchanges with Bitcoin liquidity, some of the early Bitcoin institutions as well, before establishing our own blockchain development team based out of Boston, building a number of different blockchain-based apps, including the first remittance app to use blockchain technology. That was to provide people that were unbanked without a financial credit score, the ability to get banked easily into the US. I'm not sure if anyone's done much travelling over that side, but I spent around a year there and getting access to things like insurance, loans, rentals. Everything's either out of reach or 3 to 4 times more expensive. So that's what we look to do. More recently, the company has been involved as an ICO advisor, looking to be involved more currently as an STO advisor, so security tokens or tokenised assets. We've also got a fund based out of Sydney and looking to build more outside of Australia as well. So a lot of things that we're doing, and it's a pretty exciting space to be. A bit about our team. A CTO was behind the world's first Bitcoin meetup back in, I think, 2000 and 2010. Very well-known cryptographer. Our president has been, is a well-known academic and economist, spent 7 years with the Federal Reserve out of the US, so extremely knowledgeable in all things token economics. And from a compliance perspective, our Chief Operating Officer was sort of banking pedigree, spent 20 years with the major US banks before then moving to the first venture capital-backed Bitcoin startup called BitNet to help them with their money transfer licenses. So a lot of expertise within our industry in that team. And also myself, I should mention, I come from a wealth management background, and I'm Vice Chairman of Australia's blockchain industry body, which has had some really good success in being able to change the taxation system that we had for Bitcoin. Originally, Bitcoin was the most expensive in the world in Australia before we were able to change that tax, and been able to establish a code of conduct for exchanges so consumers can feel a lot safer about using our crypto exchanges now in Australia that have been ADCA certified, as well as helping these crypto businesses get access to banking services. It's been pretty tough up until the last few months to get access to banking services for the industry. On the fund side of things, we've actually managed to bring in some old school, old world financial managers. So our head of investments, he was head of investments for Kerry Packer's fund, Elliston, as well as Caledonia Asia. He managed about $2 billion as one of the first funds into China. So back in 2003, when China had limited disclosure rules, no insider trading rules, a lot of similarities to how we've seen crypto. He was managing assets there then and built a team of 20 analysts, and that's what we're looking to do at DigitalX right now. We've also brought somebody on board, Juan Carlos. He's based out of New York, but spends a lot of his time internationally. He's spent 20 years with one of the world's largest asset managers, Prudential, and he's still on the board there. So he's helping us, move into the new world of far more regulation, more interaction with institutional money that's coming in as we move away from what has been a retail-dominated market up until now. I like to put a little bit of this in the market. Some of the highlights that we've had over the last year or so. There's been a bit of a drop in the crypto markets for those with their head in the sand, and so it's nice to sort of see some of the positivity that's come out amidst some of the crap that is in the market right now, and also a reminder to create some new highlights over the short term. I'd be remiss not to talk about some of the benefits that we do have with cryptocurrencies and blockchain. Number one being that it's not controlled by one party or one government. It's controlled by the entire ecosystem with a consensus mechanism, meaning that it's not susceptible to hacking, fraud, or control by one group. The supply of these cryptos is baked in, so you know that there's going to be a deflationary environment relative to fiat over the future, which, all things being equal, should lead to better prices. There's the allowance for instant payment settlement without the use of intermediaries, the tamper-proof databases and smart contracts, as I mentioned, which makes it absolutely ideal for use on a supply chain. And then, in terms of the interest in it globally, China's filed the most number of patents in blockchain out of any country, and the biggest movers are the world's biggest institutions. So, very exciting space. The sort of one-liner I like to use for blockchain technology is trustless technology to replace or improve corporations and government for the benefit of humanity. And I really think that's what blockchain comes down to, and that's why there's not just an interest at a tech level, at a government level, it's an interest from people. There's a massive community behind it, and that's why I think it's got a lot of legs, whether there's a bull market or a bear market. I think there's a lot more exciting things to come through it. Some of the more interesting people in the space include governments coming out there and seeing the benefits and saying that if you don't see the benefits now, it's sort of like when cars came around and people were still hanging on to the thought that horses would be around as the mode of transport. So I obviously like seeing that sort of stuff. One of the major interests as well has been the absolute flood of money that's coming into the ecosystem. That's something that shouldn't be discounted. there's actually so much of this money that is sitting in cash right now, not just, that's been created via paper wealth, and that's still looking to be deployed. The largest ICO was EOS, raised around $4 billion. They didn't hold their funds in cryptocurrency like a lot of others did. They liquidated it all. Don't even hold one Ethereum left from the $4 billion they raised. That's waiting to be deployed. Telegram, which is an ICO that raised $1.6 billion, they accepted funds only in fiat. So that's still to come back online in the market. So sort of anyone that sort of trades the banks and things like that, when you see that the dividends get paid out to shareholders, often that money can come quickly back into the ASX. And I do think early next year, some more funds will be coming back into crypto as these look to get deployed. While we're talking about tokenized assets, though, is the amount of money coming into that cryptocurrency offering is slowing down. Now, the reason why that is because there's a few questions about crypto at the moment. There's a few privacy concerns about using a distributed ledger where all nodes can get access to data. There's the issue that a lot of the decentralized applications that have been built for use have only got a few hundred users on them each. So very small amount of use at this early stage. There's the often touted social impact of blockchain tech, how much cryptocurrency mining uses, how much energy that uses. The regulations are still to be fully evolved, and that's a constantly evolving space. So when there's uncertainty, we know that markets look to discount the value of things. Obviously, the fundraising that's seen an incredible amount of money raised so quickly, people are calling for a lot more transparency over how that process happens. And absolutely, we're going to see that with security tokens and tokenized assets, which is pleasing. And then finally, it all comes down, at the end of the day, expectations. Happiness is a function of expectations. So a lot of the original token holders or ICO buyers, they've had expectations for products to be out in market, 10x returns, this sort of thing, and it hasn't happened. So a bit of disillusionment in the crypto market right now. The one thing that I'm seeing from a sort of trader's perspective is that security tokens need exchanges to trade on. There's no exchanges out there that you're able to trade security tokens with any great liquidity. So while ICOs have come off, security tokens are looking exciting. You can't trade them yet. So we're just in a bit of a holding period for the next couple of months. But you can see, a lot of the major groups out there are putting in the resources now to really be set up for that next wave coming, in my opinion, early next year. So a few more stats for you. 70% of all the ICOs are now worth less than the amount of money they raised. 50% down more than 90% from their all-time highs. So a bit of pain out there in the short term. But I would say that 9 of the 10 largest deals that have been done recently, they're all on the basis of equity, looking towards security tokens. The number of deals is actually increasing, and the most sought after deal, as you can probably imagine, is security token exchanges. Anyone building those right now is getting funded because of the amount of value that they could potentially create over the next few years. This is a little bit about some of the different asset classes within crypto. So you've seen the first one being Bitcoin. That was set up as a distributed peer-to-peer online payment system to get around the issues with government, international borders, etc. That's obviously not something that's backed by government. It's purely as a payment mechanism. What we're moving to is something where you've got far more greater access. You've got assets that are backed with real assets. And if you sort of call Bitcoin or cryptocurrencies programmable money, I think what you're looking at with security tokens is a version of programmable ownership. So you can program in, who owns what sort of level of voting rights they receive, what sort of access they get to with dividends. And there's some really exciting assets that I think you can tokenize. If you're looking just around Perth, things like that, if there was another Narrows Bridge to be created, you could look to fund that one asset via a security token. Every car that had to go through with the toll road was then paid a revenue share based on the number of tokens they had. And you're not worrying about one CEO deciding, wow, this has been so successful, let's build another 10 Narrows Bridge on a loan to value ratio of 10% and really make this company a success and bring my bonuses up. You just get to look at one asset transparently, and you can have far less costs. So I think that's something that's really to be looked forward to. A little bit more in detail, this is something that's debated ad nauseum within the crypto markets, like what exactly each token gives you access to. And if you are speculating in the space, you do need to know what you're actually buying. Some of the tokens give you access to a reward system, some track products across a supply chain, some are a privacy currency, some are a public currency, but we are moving towards a far bigger market, which is a tokenized offering market. So that's something to keep an eye on if you're speculating in the market. If you look at the market today, this is the top 10. Only one of those tokens, and these are billion-dollar projects, is actually backed by anything with hard assets, and that's Tether, 2.8 billion, as we just talked about before. So we've got all that value already created. Only one of those has got anything that's backing it. If you look at the total store of value market, $280 trillion that could potentially be tokenized, there's potentially an extraordinarily large market ahead of us. And I think crypto assets and tokenized assets absolutely address this market. Millennials have a strong distrust of banks and government. And they've got no real experience or want for having a hedge fund to manage their alternative assets. Real estate is quite expensive to get into at the moment, so fractionalised investment in real estate does make sense while you're trying to get a foot on the property ladder. And if you're looking at more exotic assets, collectible art, collectible cars, well, they're simply out of the reach for 99% of people, or 99% of the investable world. Some of the benefits of tokenising assets, these points I've made are really sort of addressing the issues that you've had with the crypto market to date. But I think as the crypto market matures, we're moving closer towards a new era where all assets are secured on the blockchain in a regulatory compliant manner. Security tokens, when they're done correctly, they won't skirt laws or regulations, but they will remove financial institutions and middlemen. So it means much lower costs and, the potential there for manipulation that comes with larger institutions. I think they're really laying the groundwork for what investors have as, one of their greatest wishes, which is to get access to all the investment classes via, one online system, that payments can be moved frictionally between all each. If you're spending, $100 of shares or $100 out of your wallet, it should be no different. In terms of sort of how technology's moved along the line, I think we're now at a stage where we really are able to combine a lot of the recent evolutions in technology to basically add that to get access to new products and new markets. With the way that sort of social media has evolved and the way that online access has evolved, I think now individuals can feel comfortable with interacting on a mobile phone and investing in new asset classes, and that's what sort of blockchain technology allows. We had a little experiment during the office last week where we wanted to tokenise DigitalX shares. They're obviously traded on the ASX, so you can do that, but what happens if DigitalX gets access to another power ledger, another very successful ICO, potentially our fee being paid in tokens, we could easily distribute that to all our token holders. And that would be a very simple process using something like Ethereum, using something like the Polymath protocol. So, we gave that a bit of a go during the week, and it was a surprisingly simple process. Set up our account. Obviously, being in the advisory space, you'd want to include a few advisors, legal providers, custody solutions to be able to get you there. But this process, you're able to select all that electronically with smart contracts. And then with a few clicks, you're able to tokenize your own asset. I think that's something that's going to be very exciting over the next few years because the assets that are able to be tokenized will be many and by anyone at a very low cost. So yeah, pretty exciting future coming up with that. A few words on risks with what we're doing here. I think generally that this represents one of the greatest opportunities coming up in the market, but from a regulatory perspective, it will be their greatest challenge over the next 10 years, how to manage things like continuous disclosure, which investors get access to products, sanctions, how that's all mapped. But there's some exciting technology that's being built into that with things like whitelists, with things like digital identity. So I think over the next 10 years we will be able to map that, and I think when you sort of factor in these risks that will potentially stop, I would say that's not likely to happen. I think it's just a case that this movement is only likely to be slowed down a little bit. It will definitely get there. And sort of a final thought is, around all the alternative assets that can be tokenized, I think that's fantastic. These have been some of the best performing assets in the world, some of the more alternative ones, which we don't get access to right now. But just because something can be tokenized and you can trade it, doesn't mean you should. Things like art and collectible cars, that's certainly for a long-term holding period. And I think, I don't think anyone in this room would be looking at that. But, from a trading perspective, retail investors are traditionally pretty poor traders. So a buy and hold strategy would still work in the tokenized model. So I think it's just a case of getting access and improving transparency in a compliant manner. Thanks for that.